Hello, everyone, and welcome to the season 2, episode 10 with Pankaj Jain joining us from New York City. Pankaj, thank you so much for joining us.
Thank you for the opportunity. I really appreciate that you guys are doing it. I'm really excited of what we're going to talk about. It's just a conversation between friends. Thank you.
So, Pankaj, you started as a corporate guy in tech, and then in 2016, you branched out after holding senior positions in the United States with Genpact, with Crystal, to then starting your own company, Synaptic AI. And as if that weren't enough, you went and started yet another startup called Algebrik's AI. Now, when we met a couple of weeks ago in New York, I was floored. I was not paying attention to my dosa. I was already thinking of my questions for today's
Right.
conversation. So just spill the beans. Tell us what it is like to have moved to the other side, and when did this kida of entrepreneurship come in? You're not from an entrepreneurial family, first
Right.
generation entrepreneur who's doing
Yeah.
so well for himself. So first of all, thank you very much. I was most inspired meeting you, and I
Thank you,
wanted to
Deepa.
share you and your story with our audience today.
No, thank you, Deepa. So, to be fair, we do come from entrepreneurial family. It runs in the blood. I've written a blog about that. So we are, originally Marwadis from Rajasthan. My dad moved out, and he was in, government central services, and so we stayed. And I was born in Madhya Pradesh, Gwalior, and I did my engineering from there, from State Engineering College. But I've been always entrepreneur since very childhood. So my earliest memory is when I was third grade. I started renting books, and the way I used to do it is I used to go out to the used car books shop where they used to sell by weight, and I used to get them, buy them, clean them up, and then I would rent them out like maybe 10 times and then sell them at double the price of what I bought by weight. So even then, when I was like 9 years old, I was making my own pocket money by doing this trade.
Wow.
And then I got into stock market early on. My uncle was a avid stock market investor when I was 15, and I remember investing in my first IPO of Mangalore Petrochemical Refinery Limited (MRPL) when I was 15. That my first IPO, and then I got into secondary market as they allowed me to start trading when I was 18. And then I started my first venture when I was in college. I wrote a software for the calculation of bending moment and shear force in the longitudinal bridges, which I sold to National Highway Authority of India. Then we built a contextual search engine right out of the college, and then I ran a management training company. And then finally, I got headhunted by a spin-off of Citibank, which is where I met Milind, which was called iFlex later, and built the career over there and moved to US. So to be honest, Synaptic was not my first entrepreneur stint. I've always been an entrepreneur since very early in my age, and I've always been inspired by entrepreneur stories. I've always read autobiographies of the people. So when I was in Genpact, I met my co-founder, and I was the leader of the large deals team, and he was the head of analytics. So I always knew that I'm a market guy. And Milind can tell you the stories that even when I was doing my technical work in iFlex or Citl, I was always a relationship guy, right? And that's why Vikram Gupta, who was my super boss then, he found that sort of spark in me and sent me to US, and I was like third, fourth guy in the US to establish this. So I think Synaptic obviously was the first foray of building something in the US from ground up, and that Kira, to be fair, was there already. It's just a manifestation of that Kira, and finding somebody who was like-minded to see that how do we democratize the technology to be able to help people. And that was the whole purpose, that can we democratize the technology and help small financial or community financial institutions so they can actually help drive financial inclusion. Even in a country like US, there are 45 million people who are credit invisible. They don't have any form of banking or credit access to credit. So that was the whole purpose of doing that. Sorry for the long answer, but yeah, that I just want to give you context of how I landed where I landed with Synaptic.
Oh, no, this was very helpful. But choosing the space that you did, which was really in the space of financial inclusion, was, there was a bridging together of the your interest in finance and money, and of course technology. Where did the social angle come in, and why think about the underserved, and why make that your passion and purpose, and build a whole business around it? How did that, was there a day, was there a moment, was it an underlying current in your heart? What was it?
Yeah, so I think, thank you. That's an interesting question. So when we started Synaptic, the main reason of starting that was the technology was getting cheaper, the data was becoming more and more available, and we knew that. And at that time, to be a fair, Deepa, AI wasn't the buzzword. We are talking about 2016. The
Yeah.
buzzword it has become today after the introduction of ChatGPT and all the things which are happening since last 2 3 years. People were cynical about that topic, and the reason why we started that we wanted to democratize the technology and make the data useful for people to be able to do something which can help people's life better, right? That was the whole purpose. But because we didn't know anybody in the community financial institution, which is where, later we discovered that that's where our heart is, that's where our mission is aligned. But initially we went to the big banks because my job in iFlex and Citil was to go out and reach out to Credit Suisse of the world and Deutsche Banks of the world and UBS of the world and GEs of the world. So that's what I did, because what you do is what your experience is, and that's what we reached out. So we did get a lot of clients in that bulge bracket banks bucket, as the initial part of Synaptic journey. But what happened is that we were realizing that even though we were making more money, if I look at the whole Synaptic revenue journey, uh, we were not happy because the output of the technology, of the impact of the technology, wasn't seen as we wanted it to happen. So
Hmm.
around December 2019, when we are reviewing of annual review of the financials and which clients and all that, we came to realize that one is obviously sales cycles were long. Second, the implementation were even longer. The third was because of the political environment in some of these large banks, we were not seeing the impact of the technology reaching or impacting the lives of the people to the betterment of what was the mission. So we said,
Hmm.
why don't we pivot in December? So to answer your question very specifically, yes, December 2019 was the time when it occurred to us that technology was not making the impact, even though we were making more money. So we pivoted and we looked at that. What do we do? So when we found out this community called credit unions in the US, which is massive financial community, they have about 135 million members in the US. They serve about $3 trillion. They have about $3 trillion of asset, which is a massive, like it's bigger than many countries' GDP. And they are not for profit. So all of that, what they do or whatever profit they make, they reinvest in community development, the technology, and all of that to help their communities, live their best financial lives. So we looked at that and we said, okay, we want to pivot that. Looks like there is mission aligned. But the moment I looked at my Rolodex, I realized I don't know anybody, not a single soul over there, because I
Wow.
always been a bulge bracket bank. So that was the moment when we decided to pivot.
Uh, and then, so then you all went into going after and building networks, building relationships with these credit unions. Was that like one union at
Yeah.
a time kind of a journey? Oh,
Yeah, so it was hard, right? So when we looked at our Rolodex, when we realized we don't know anybody, and it was January 2020, and 3 months later, COVID hit us. Like 7th
yeah,
March, our office got closed. So it
correct.
was a tough time. First of all, you don't know anybody, and I'm a relationship guy who builds in-person relationship. So
Yeah,
even though Milind might be talking about my stories to you, but until you and I met at restaurant, I think that you just can't see the energy of the person, and the chemistry doesn't come to fruition until you meet in person. So me being an
yeah.
in-person guy, it was hard for me, and then building one by one. But to be fair, that we hired a couple of people, and then we said, okay, look, we are going to start from zero. We
Okay,
started reaching out to the people, and then we did like 600 700 Zoom meetings that year, because Zoom also made us
okay.
productive. We could do multiple meetings per day because the travel wasn't involved. And then,
Okay.
then we started traveling in 2021, but we were able to build relationship because, one of the things which were happening is that people were also more attentive because they know that nobody was traveling. So the Zoom meetings were more focused, they were more attentive, they were also empathizing with the whole pandemic situation. So I think we were able to do a good job in building the relationship, uh,
Yeah.
and then actually sign some clients. Like, it took 1 year after the pivot, but we were able to sign some clients. And then, later on in 2021, we started meeting people, taking them out for drinks and dinner, and building the social networks and all of that, and doing conferences. But yes, it was hard, but we started doing it through Zoom meetings in 2020.
So Synaptic continued to have the big banks as the clients at that time.
So we did have, but then we started to taper it down and roll them
Okay.
off as we
Okay.
started to focus on the credit unions. And then we started, sort of building the hockey stick relationship with the credit unions. Yes.
So actually, the lockdown and the time that you could get through using Zoom instead of doing a lot of these in-person meetings, maybe you could have done maybe 30 or 40 meetings, but you
Yeah.
could now do
Correct.
more than 100 meetings
Right.
in a day, in a month,
Right.
sorry.
In a month. Yeah. Yeah. So actually, we used that to our advantage. We started working hard. We used to set up calendars like 1 hour. I remember my colleague Samantha Hubbard and I, at days we have done like 6 meetings, Zoom meetings, our meetings, because we
Wow.
were just taking every meeting possible. So we said, let's just spread the word out that there is a company whose mission is to help drive financial inclusion, get more and more people, live their best financial lives. And to be fair, that time AI wasn't the crowded word, and we were the only few who were talking about it. So we also
Correct.
had to face the cynicism. We also
Yeah.
had to face the backlash, and people were laughing at us and they're saying, "What are you talking about?" And but today it's more acceptable. But also that helped us, stand out among the crowd, and it was easier to get the meetings because we were the few companies who were talking about it, which can actually help humanity. So yeah, so it sort of worked both ways, and we used it to our advantage.
Fantastic. So then cut to, the that part of Synaptic was growing, right?
Right.
Then what happened? How did the idea
Of
of
Algebrik.
algebraic AI come into your mind? Was it a day? Was it a moment? Was it an incident? Was it a person?
So I think it's combination of all of that, Deepa. So in synaptic journey, believe it or not, and I have a record of it, right? I know exactly how many people I've dined with. I know exactly how many people I've met in person, how many people I've done demos, and I have a memory of an elephant. And not that I want to take a credit of it. It's just basically, the DNA, and that helped me quite a lot because I'm able to
Hmm.
remember people's faces, their names, their kids' names, their wives' names. Really deeper story of they've told me about a story of their personal life. I would remember that. So in that journey, I met over 2,500 C-suite executive. I'm not even talking about like people who are actually doing the work, heavy lifters. I'm talking about CEOs, chief lending officers, chief risk officers, chief experience officers, VP of lending, those type of people. And one of the things which was coming out very clearly, as you would know, that Synaptic is a decision engine which runs on the rails of a loan origination platform. That think of that as a workflow engine which has the ability to take the application and process and move the application around to be able to get the loan to the people in their bank account or checking or savings account. And what Synaptic does, it sits on top of it and being able to process the data much more accurately, use AI to be able to say the people who typically get declined, they will able to say, no, you are approved, you are going to behave better than what other systems are saying. So more financial institutions are able to lend them more confidently. So then in that journey, people told me that, PJ, these rails are old and squeaky. These rails are holding us back from being able to attract digital natives, Gen Zs, people who are going to be the future generation, because this is also a time where the biggest wealth transfer is happening from baby boomers to Gen Zs, from Gen X to Gen Zs. So they want to get into that. If you look at the reports, even American Express and Capital One, everybody is tapping into that. And And these credit unions, because they don't have the capital investment required to modernize the technology the way American Express or Citi or Bank of America can do, they are not being given the best of the technology which is available today. So
Right.
sort of they were sort of talking to me about that, and we said that, you know, why don't we build this? But building an LOS, you know, which
Yeah.
is a omni-channel point of sale, an entire loan origination platform, the analytics and everything, is not a small enterprise. It's a massive, massive software. So most companies, the last company, Deepa, believe it or not, has happened 26 years back. Not a single company has come about in this space in last 26 years. And that technology at that time, to be fair to them, was good, but it is not good today because the technology has moved the Moore's law. You know, it is now so sophisticated that people can do everything on their phone, on the website. There's no paperwork involved. You know, you don't have to have any human interaction unless you want to. AI can handle everything. So I said we can build those rails, and you know, and then be sort of behave like Switzerland. You know, if people have Synaptic, they can vertically integrate Synaptic, but if they want another option, we are happy to do that. So I then started thinking about it, and then I found an investor called Incred Finance. You know,
Yeah.
Bhupinder Singh is the founder of that. You know, it's a very large company, and they are doing amazing work in India. And then Bhupi and I hit it off. We met last year, and he said, you know, Pankaj, let's just start this, and you know, I'm going to back you up, give you the software you need, let repurpose that to help credit unions. So we have launched like 40 integrations since then. We launched the product. You know, it's available for all consumer credit products, from direct auto, indirect auto, personal loan, credit cards, HELOC, home equity loans, and everything else. So that's how it started. So it was not just one person, but the culmination of series of events and talking to series of people. We were able to, you know, come together to conclusion that there's a need or a white space available where I could start this company, and that's how I started Algebrik AI.
You know, another thing that I picked up is having the right people doing right roles. In Synaptic, you said there was somebody you had worked with before, so you knew what they brought to the table. You knew
Yeah,
exactly what you're going to bring to the game. So tell us a little bit and unpack that, because you know that the sexy part is the technology. You know, you're saying talking about dinners and drinks, which is the non-sexy part, so to say. So how did you you know, think that through? And that's so smart and wise both, because I know a little bit of the backstory, guys, so I'm getting Pankaj to tell it to you from, you know, the
yeah,
horse's
that's the
mouth.
Yeah, so that's a little bit of secret sauce, but anything for you, Deepa. So I think that the way I think about it, and you know, I've seen or met a lot of successful entrepreneurs, and I've also learned from their stories. One of the things which I'm, you know, very impressed with Steve Jobs from very early on, and I saw his speech in 2008 when they launched, or he was on the stage to launch iPhone. And one of the things he said, which stuck with me, was uh, you know, you once in a while there is a revolutionary product which comes along and disrupts the complete industry. And if you look at what happened that time in that time, was BlackBerry and Nokia had 98% of market share. He wasn't the first iPhone or the phone in the market, but he was 10x better, right? iPhone was 10x better what was available in the market. So my philosophy has been this same philosophy, that it is like, you know, you have to be either of the one. You have to be either the first or the best or the biggest, right? If you're not either of them, then you're not going to survive. And that's why there's only 98, 99%, only 1% or 2% success rate, 98, 99% failure rate of startups. So when I thought about Synaptic, you know, and go to the market strategy, you know, typically there are three legs of this tool, which is called startup. Number one is the market facing, which is the most important thing. You know, there are a lot of people who can build sexy and great products, but the problem is that if there is no product market fit, if you're not able to find the users, you know, we are hearing these stories every day in the news and the failure of the startup. And you know, I think that a lot of people think about from technical perspective that how sexy or how great it is. I always think about that how it is going to help people, because
Good.
that utility is the number one thing. And I was
Hmm.
talking about the stool. So this is a three leg stool. Technical stool is one part of the story.
Hmm.
The biggest tool is the market facing, that how do you going to find the people who are going to be emotionally attached to your product, the utility of your product, to be able to better their life, because that is the ultimate goal. That
Correct.
is it helping people. And the third leg of the stool is the operations, or whatever you call it, administration and operation, which is also a big part of the
Correct.
story, because it seems
Yeah,
easy, but it is a big part of the story. So
absolutely.
I was always focused on handpicking leadership people, because one of the things which happened in the startup is that if there is not enough trust among the startup founders or co-founders or the key leadership people, then you're always watching each other's work, and that is not possible in a startup environment, because 1 plus 1 has to become 33. It cannot be 3. So
Yeah,
then I only handpick people who I know, and I know for sure that this is what their key skill is. And in the startup world, you might wear multiple hats, but everybody is also individual contributor. So they
yeah,
must deliver that KPI or whatever the key role is. So I handpick
correct.
those people. And then, as one of my our CMO recently said, that most people start from product, branding, marketing, and and everything else, sales, revenue, and then people. I actually flipped the whole equation. I said, I'm going to start with people, knowing
Wow.
people, knowing their story, what they want. Because even when people are buying for the corporate budget, they are always buying from their personal agenda. Will
Yeah,
it help me in my career? How will it help me taking my family to a vacation? Will I get more? Will I get promotion? Will I get more money? Will I get more career opportunities? So everything they're buying, every purchase decision is happening how it relates to their personal life, their family, their career goals, their aspirations, even though it may be a corporate purchasing. So I want to know people deeply about their families, what their ambitions are, what they're trying to do, and you cannot do that in office setting. So one of the things which I tell my team, that this is my hierarchy: a dinner meeting on a holiday or a holiday or weekend is number one relationship yardstick. Number two is a dinner meeting on a weekday. Number three is a lunch meeting on a weekday. Number four is a Zoom call. Number five is a phone call. Number six is a text message. Number seven is email. So this is the relationship stack. If you are dealing with people only through emails, you are the lowest at the relationship stack and quotient. If you're taking people out on a holiday or on a weekend for dinner with them and their family, you are the topmost relationship maker, and people trust you. You're not a snake oil seller. You are the one which people will buy no matter what you build or sell. They will just buy it because they know you're never going to be showing their back. So that's how I do it, and that's how I handpick people basis horses for courses.
fantastic. Now, the ambition part. You obviously drive yourself really, really hard. And today we talk about, you know, talent and the people,
Yeah.
and how people want to have a lot more work life balance. So have there been those kind of challenges where the drive and the push that you bring to your day and your 24/7 full on energy, how do people match that, and how do you keep your patience, how do you inspire them to emulate or to be like you?
Yeah. Yeah. So I think that first of all, I'm always scanning for talent when I meet people.
Hmm.
And people typically, Deepa, don't change, and they remain who they are. And many times you see the manifestation of that in their career growth, or whatever they do. I'm not judging anybody. People have to decide for their own, and everybody has their own ambition in life. All I'm saying is that I'm always scanning for people who can meet my energy. And it's always hard, but you also have to have realistic expectations, and being able to give the flexibility to the people so that they want to put the discretionary effort without me asking for it or anybody
Hmm.
asking for it. When
Yeah.
I was putting the discretionary effort, I don't think anybody asked for it. I was just putting it out of my own will, and not because I was chasing money. It's just because that's who I am. And you can always find people. There is a concept called serendipity, and you always being able
Yes.
to find those people, because like attract like, and so those type of
Yes.
things happen. So I'm first of all, so that's the yardstick where I'm always scanning people, and when I'm meeting people in conferences or dinners, in a social event, I'm always out and about. So that's number one. Once I found that, one of the things which I say, okay, I will just do what I have to do,
Yeah.
and show that, lead by the example rather than just preaching, through the books. And I'm
Yes.
sure people will get inspired. So even if they are able to match up to the 80% of what I'm trying to do, I think it is anyway double of what typically people would do. So I'm already getting 100% more additional discretionary effort even at my 80%, which is even more than a typical corporate world or startup or would have gotten from their people without asking for it or forcing them. So I actually try and drive the discretionary effort part without being without telling them that what they need to do. And we don't measure people by the number of hours. It is always about the output and whether you are able to make that impact and get things done, right? GTD. So that is the number one. We don't care where you're working from. I'd never ask that question, right? I remember my bosses used to ask me, the moment I pick up the phone, first question is, where are you? How does it matter, right? I really don't care where are you. My first question is, have we got that done? That is my first question. Did that thing which was on a plate, are you able to block and tackle and have been able to gotten it done? And the second question is, if not, how can I help? And the third question is that, do you have another idea of how do we solve this? Those are the three questions. Not about where are you, what time you started, what time you finish, are you going to do this? That none of my business, to be honest, as long as people are delivering more than what I expect them to deliver.
Yeah.
So I think that once you do that, then one of the things which I learned from Jack Welch, who's also another idol, he's a famous quote, a very famous quote from him. He said, if you hire the right people, take the compensation out of their mind, give them wings of the freedom, give them purpose, you almost don't have to manage them. They
Yes.
will actually do things for you. So that's the philosophy I've adopted, that I actually, do very well in the compensation. We do more than the market, so that they're not worried about their financial situation. That is out of their mind. Give them freedom, give them purpose. Even Algebrik has a purpose, similar purpose, to the like of what Synaptic had. And then give them freedom to do what they want to do. I never hire people and tell them this is how you have to do it. I ask them, how do you want this to do? There may be a better way for you to deliver this or do this. So I will learn from you. So when you give respect to people and ask for their opinion, they feel empowered. You almost always get discretionary effort. So that's how I've been able to drive more value from people.
Since we got two role models and we talk about three being the magic number, who's the third?
So I think that from the recent journey, I've been very impressed with what Sam Altman has been able to achieve at a very young age and being able to revolutionize the industry. In earlier days, Lee Iacocca, who actually turned around a bunch of companies, Chrysler, he was
Yes.
my role model. He's still my role model. But I think the new age things, I'm being more impressed by, Nvidia's founder and CEO and Sam Altman, because I'm seeing that they're also disrupting the market. And if you really see their journeys of how these companies have been on the holding pattern for a very, very long time, and then at one point they saw the tipping point and they became like a hockey stick growth story, and achieve like $1 trillion market capitalization. So they're also my recent role models. But I'm always reading about how they are doing things. But one of the things which I've realized that people might think it's all very sexy and glamorous. All of these guys actually work 18 hours. None of these, like, no matter how smart they are. So that's become like a hygiene factor nowadays. So no matter how smart you are, because there are only 24 hours in a day, and if you want to get things done, you have to put more hours. So one of the other things which I am very blessed with is that I don't need too many hours of sleep. I typically sleep 4 or 5 hours maximum, and not just now, like my early childhood. That's how my journey has been, and I can get refreshed in that many hours. So I have a lot of time in my hand to be able to get a lot of things done.
Amazing. So we are coming to the close of the session. So if you want to tell our viewers three things that you think are non-negotiable for success, what would those be?
Yeah. So I would say that number one is the grit, right? Which is a combination of perseverance and hard work. And that's a single word for that. That basically goes without saying. That is the number one factor, that you have to do it in a manner which is better and more than your market, or the, in the market you're playing, or the other players who are doing. If you're not able to do that additional, you know effort, then it's not going to happen. And that is one of the reasons why we see 98%, because most people uh, you know uh, don't think about that in that manner, and they think that if you do regular 9 to 5 type of job, you can still make a startup successful. I think it takes 3 to 4 times more energy, more perseverance, more hard work than a typical job, at least up to a point where you're almost certain that you're going to be 100% successful. Now it's just a matter of time whether you can be a successful startup sooner or later. That's number one. Number two is consistency. Whatever you do, you have to be consistent. And I'm just going to unpack the word consistency means that you have to come through on the word, you have to show up, you have to, once you say it, you have to just do it in a consistent manner, such that it becomes an expectation, and then you are actually fulfilling that expectation on a daily basis. It is not once in a while, or a month or 2 months or a quarter thing. You have to almost do it consistently, and most people are not able to follow that consistency. And I see that very very consistently, that most people are not able to follow that.
Yeah.
So that is very important. It's a simple word, but it actually manifests in many ways. It manifests in trust, it manifests in setting the expectation, it manifests in discipline, it manifests in how you reach out to the market and what is market expectations. So that's number three. And number four is the I would say that, again, honesty, transparency. It's a combination of
Yeah.
how you establish yourself. Like, do you have skeletons in your closet? Do people know your story? And it is not just about selling. Look, ultimately, AI may take over several things, and people are saying they're going to take over some of the jobs with automation, and now agentic AI actually doing things which people used to do. And we as humans have always evolved to do greater order things, right from the first industrial revolution. And every time there will be hue and cry and fear and everything, but we have come out stronger. So my point is that ultimately the jobs and the roles which are going to remain are the people to people jobs,
Yeah.
people to people roles. So in the future, even the creative roles, like creating music or art, I think the AI will get smarter and smarter. It will take over, as it's happening in music industry and other fields. But I don't think that anytime soon it can be empathetic. It can have the ability to deeper understand people's stories. I think that if you are able to establish yourself as a trustworthy, transparent, honest person who is really into helping people, or whatever your agenda is,
Yeah.
I think it takes away that enigma from the people, that can I trust? Because ultimately, that is the number one thing when people buy. Like, do they trust you? Do they trust the product? Do they trust the brand? So you see world over, right? In India, Tata or Reliance, people trust those brands. Here, like in cars, BMW here, so I think that is the number
Yes.
three thing, that most people don't come out transparent and honest, and they, and it may be a reason, or they are not front and square, but that would be third advice I would give.
Fantastic. So that, thank you so much, Pankaj. That was Pankaj Jain. He calls himself PJ. I'll still call him Pankaj unless he gives me permission. And founder. And I'm looking forward and waiting for the day when the company gets listed on Nasdaq. So wish you
Thank
all the
you.
very best. May all your dreams come true and keep on inspiring us. We will follow you and keep watching what you do and all of the optimistic, energizing, and the leading from the front that you do. Thank you,
Thank you,
Pankaj.
Deepa. Thank you for the opportunity. Really appreciate it. Thank you.
Thanks.
Bye bye.